Hi, welcome back to Not So Obvious Watches, and welcome to a video I've been waiting to make. Dying's going too hard, waiting to make, which is a look at the Swiss watch export figures for all of 2021. I've been waiting to make this because I've been kind of watching the monthly results and holding back on making any statement, because I really did want to get to the end of December, get the full year, and be able to sort of smooth out a lot of the month-to-month perturbations that we get. The figures dropped about 2 days ago. I've had a bit of a look at it. I've done some thinking. Here are my sort of headline thoughts about what we can see in the Swiss watch industry figures for 2021. Okay, so let's get into this analysis of the exports of the Swiss watch industry over 2021. Headline: the perturbation of 2020 has been largely overcome, and we're returning to the trends of the last decades. You will note that most of my comparisons ignore 2020 and compare 2021 directly to 2019. What you'll note is that there's been an overall reduction in numbers. This has been continuing since 2010. And what we have here is a 23% reduction in the numbers of watches sold since 2019 and a 40% reduction in the numbers since 2010. That comprises a massive drop at the low end, but solid growth at the high end of the price ranges, meaning that you end up with overall growth income of 2.7% compared to 2019 and over 40% more income coming in 2010. So that's 40% more income compared to 2010 with a 40% drop in numbers of watches sold in 2010. Okay, so let's get into the detail, but before I go on, let's be clear. I'm not going to try and cover everything. There is so much you could dig into. I'm not going to go into things like the breakup of metals or mechanical versus electronic. I might in another day. Those are interesting, but I'm not really going to focus on it now. What I'm going to be looking at is fundamentally where are watches being sold and how much are those watches costing. Okay, so let's get into where are watches selling. There looks to be massive growth in the US and China. I say looks to be because I think the Chinese number is a little bit deceiving, but I'll get to that in a second. Let's start with the USA, because this is A, an unqualified success story for the Swiss, and B, the USA is now the single biggest national market for Swiss watches in the world. 2021 showed a 670 million Swiss franc real growth over 2019. And that's despite what would certainly have been some lost tourist sales during that time. That's a 27% increase over 2019. And it means that the US now has a 14.5% share of worldwide Swiss exports. What's caused this? Well, obviously in the short term, the US has had a fairly unique COVID response with very few restrictions, but also considerable stimulus. And that doesn't appear to have been particularly targeted at the low end, meaning that you've got strong spending across the board, lots of money going into luxuries, lots of that ending up in watches. You've also got a fair bit of catching up going on. One of the things that I noted as I dug into this is that the US is a relatively immature market. It's a bit of a laggard in the watch spending department, and there's a bit of work for them to do to catch up. I'll go into that a little bit right now. Now, look, I'll freely admit that these numbers are pretty rough, and my level of economic analysis is pretty rudimentary, but it's still interesting. In short, the US has a population of 334 million people and a GDP of around about 21 trillion US per year. That means on average they're spending 9.2 Swiss francs per person per year on watches, or around about 0.016% of their GDP on watches. That in itself doesn't mean much, but it's interesting to compare it to the European players in this space. It's interesting to take the top 6 European players, UK, Germany, France, Italy, Spain, and the Netherlands. Add them up, and they have a population very close to the US of 339 million people, a GDP of only 2/3 the United States, of $14 trillion per year. Do the maths, and that means that the Europeans are spending 14 Swiss francs per person on watches every year compared to the 9.2 of the Americans, and 0.037% of their GDP, more than twice the percentage of their GDP going into watches compared to the Americans. Okay, so what does that mean? I'm not sure. It does lead me to think that the US market has simply more room to grow. It has more space for watches to inhabit more easily than the European market. And I think it does it makes me think that we should expect to see more growth out of the US moving forward. Okay, now let's look at China, which, without further analysis, looks to be going great guns. Huge growth, 48.8% growth compared to 2019. $973 million more Swiss francs being spent on watches than back in 2019. But I think it's important to also look at what's happening to Japan and Hong Kong. And what you see there is a combined loss of sales or of exports of 750 million Swiss francs per year. Everything I've read has indicated that what we're seeing is a massive repatriation of Chinese tourist spending that was going into the Japanese and Hong Kong markets, now being redirected to the Chinese mainland. If we extract the 750 million from the 973 million Swiss francs, what it means is that there's really only about 220 million Swiss francs of real growth, of new money going into watches from China. And we do see this when we look at the aggregated figures of regional sales. What we see is real growth across the Americans, but really just a shuffling of money in Asia and Europe. Speaking of Europe, overall what we're seeing here is a slow return to pre-COVID, pre-pandemic levels. There's solid growth compared to 2020, except in Ireland where something weird happened, probably Brexit related, and Portugal, which I don't know enough about Portugal, but clearly something's going wrong there. But despite that slow and steady growth, Europe is continuing to lag both the Americas and Asia, and it's lagging itself from 2019. However, before we get all doom and gloom on Europe and put a line under it, I think we still need to remember that despite being kind of stagnant, it remains the second largest region receiving Swiss exports. I think it's something else we also need to remember is that the exports to Europe does not count watches that stay in Switzerland, which is still part of Europe. This value is estimated to be around about the same size as the UK, France, or Germany. So you're actually looking at an extra 1 to 1.2 billion Swiss francs per year that could be considered exports to Europe if you wanted to. And I think it's important to remember that when you're looking at where money's being spent. Okay, so that's where watches are being exported to. Now let's look at how they're being exported in terms of prices and numbers. In short, the bottom has fallen out of the bottom. Now, before I go on, remember that the prices we're looking at here are wholesale or export prices. To get to likely retail prices, a little bit more than double. So think of that bottom category as being things that retail up to around about 500 Swiss francs, 500 US, or maybe around about 1200 US for the next rung up. But what, as I said, you can see is that the price here is absolutely plummeting. Across these combined categories, 4.741 million, so 4,741,000 watches less being sold in 2021 compared to 2019. That is a 30% reduction in overall volume. Thinking about that fall in sales, what you're talking about is 510 million, or just over $500 Swiss francs less in money, or a 25% reduction in the income to the Swiss industry from sales of those bottom end brands. Okay, so if the bottom's fallen out of the bottom end, but overall we've been told that watch export value has been increasing, the top end must be doing okay. And oh my God, yes it is. The top end breaks into two categories. The first, retail, with a retail value of around about 1,200 to 7,000 Swiss francs, and then the top end being 7,000 Swiss francs and above. Curiously, I think these days you can pretty much draw a line between those and call it the Rolex line. Everything in that top category is a Rolex or above. Everything in the category below it is a Tudor, Omega, Breitling or below. Obviously there's crossover, but broadly speaking, that line really struck me. Okay, so let's get into the middle rung, the 1,200 to $7,000 Swiss franc sort of retail area. And quickly what you see is 298,000, nearly 300,000 less units being sold even in this level. Now that's a 9% reduction in the value of exports at this level. Putting that in money terms, it's 150 million less Swiss francs per year, or around about 3.5%. What is interesting is if you dig into those numbers and look at the average prices, what you see is a 20% increase in the average value of watches sold in this class. Looking at this chart, it does intuitively make sense. I think most of us probably feel that the watch buyers in that 1,200 to 7,000 Swiss franc area have probably been okay during the pandemic, but at the same time haven't really done extraordinarily well. And so they've kind of treaded water. Maybe they've expanded a little bit, gone up market a little bit, but have generally just stuck tough. And I think as watch buyers, what we've seen is this is a price range where we've seen discounts tightening, not vanishing completely, but reducing just a little bit. And we haven't seen large scale delays or really long waiting lists, just the occasional problem getting some watches. But for example, look at Tudors. They always come eventually. There's just a little bit of a break. And that kind of market behavior, that kind of experience that we're having as watch enthusiasts kind of matches up with this return, very close to a return to 2019 numbers during something of a pandemic period for people interested in this entry to middling level luxury. Okay, but when you go up to the next level, over onto the other side of the Rolex line, things that are going to retail for more than 7,000 Swiss francs, everything changes. What you notice here is that in this category, Switzerland exported 119,000 more watches, or 7% more watches than they did in 2019. Importantly, that is more watches in number being sold at this price than at any other time in the Swiss watch industry history. This is a record for the number of watches being sold in this price range. Speaking of records, this brought in 1.4 billion Swiss francs more, or 9.6% more than it ever had before. Interestingly, this category has only seen about a 2% price rise. So the price increase here hasn't been as anything like as large as we saw in the category below, which was around 20%. Instead, I think this is an area which is growing hugely in number, but not necessarily as much in value. And when you think about it, and one of the reasons why I put this down as the Rolex line, nothing says more about what's going on with Rolex than this slide. Because, as I said, if you think about, the bottom end of most Rolex watches now, down around the OP level, is not far off that magic number of around about 7,000 Swiss francs. And you think that Rolex is likely putting out 850 to 950,000 watches per year. Look at the number of watches in this price range being sold. Rolex likely comprises 50% or more of this category. So as this category is expanding, as people and money is flooding into it, it should come as no surprise that you can't buy Rolexes. And the key here is to remember, this category is now producing and exporting more watches than ever before. Stop thinking that this is a supply chain thing and that post-COVID, everything's going to snap back into place. That is not true. The watch industry in this market segment is running faster than it ever has before, and yet it is still not satisfying demand. Okay, so they're really the ends of my observations. Let's get into some conclusions and outlook. 1. The US is booming with real growth, and personally, I think if you're got a watch brand and you're not selling in the US, you're an idiot. That is the fastest growing region for watch sales. It is certainly the one with the most room for growth. That is where you need to be. We can see China repatriating sales from across the world, but especially Asia, and continuing to grow, but not exploding as the headline figure would make you believe. I believe they're probably only really growing at about 2 to 3% per year. Europe is a large and mature market, slowly returning to pre-pandemic sale levels, but it's not there yet. In terms of outlook, I think the US is likely to have some economic headwinds coming. Fiscal stimulus is likely to fall. But as I said earlier, I continue to believe that the US market is relatively immature. And given where the growth is happening, those people are less likely to be affected by economic headwinds. So I think the US market's going to continue to grow, albeit it'll probably be a bit slower than the pandemic pumped up stimulated rates. I think China will continue repatriating sales at least until Hong Kong is drained dry. On that point, I believe Hong Kong has at most 2 more years in the top 3 export markets and won't be in the top 10 within 5 and might not be on this list at all within 10 years' time. You heard it here first. Okay, so this one's going to be a little bit more ropey, and I put it out there. I am an engineer, not an economist. I could get this completely wrong. But across the board, I think China's going to continue growing its real organic growth, not just the stuff it repatriates, at around about 2 to 3% per year. What's my thinking here? Look, the economic problems with the Chinese economy are well known, and people that know a lot more about it than me have done videos on the dangers of the Chinese economy. My personal opinion is that macroeconomics is largely a magic trick, relying on people needing to see the magic being done. I think the rest of the world needs the Chinese economy to keep going. We will continue to believe in that magic trick, and that economy, even though every fundamental would say it should collapse, it won't collapse. And that we will find a way to suspend our disbelief and continue for the Chinese economic miracle to move on. Having said that, I think at the micro level, Chinese investors are continuing going to see that perhaps the stores of value open to them, such as real estate, might not be as secure as they think, and that Rolexes, Pateks and APs might provide a safer home for their wealth. As a result, I think those two things combined, the Chinese market is going to continue to be quite hot, and we're going to continue to see growth, real growth in that market. Absolutely nothing fancy to say about Europe. I think it's going to continue to just keep chugging along. Nothing dramatic's going to happen. It's going to slowly hit and then pass its 2019 numbers, if not in 2022, definitely in 2023. All bets are off if Russia actually does invade Ukraine. That is a nightmare scenario that simply changes everything, and I have no idea how it would go, but we'll deal with that if and when it happens. Moving to the bottom end of the market, of course it's going to continue to shrivel. You hardly need to be Nostradamus to say that. A true speculator, a true investment guy would have some idea how bad this could get, how low that number could go. I really don't. I'll be looking for the mid-year Morgan Stanley survey that I hope comes out. Maybe that'll give us some insight. What I do think is that we will continue to see brands doing everything they can to migrate north for price. If I had a Swiss watch brand, I would not consider selling anything at a wholesale value of less than about 1,000 Swiss francs. Anything below that, and I think I would feel the sand draining beneath me. I would definitely want to get up into those retail values of 2,000 Swiss francs plus to feel like I'm in an area of potential growth. When we get to the middle rung of watches, those retailing at say 12 to 7,000 Swiss francs, generally you see that's doing okay, but you even notice in there that prices are rising. As I said, in that range, prices rose by 20% in the last 2 years. I would expect to see that continue. Just as the lower tier guys are desperately trying to get over 1,000 Swiss francs for their average wholesale value, the guys in this category are going to be super keen to get up over that, wholesale value of 3,000 Swiss francs. I think you can see examples of that right now. Recent releases from Breitling, for example, a brand I follow, you can see they're dropping lots of 7750 powered chronographs and replacing them with watches with B01 movements or B0 movements, each of which adds about 1,000 Swiss francs to the value of each watch, at least at retail. I think there's a classic case of desperately trying to elevate the brand, make it more luxurious, make it more expensive, and ultimately put it back into a growing area. Okay, so my prognosis at the top end is it's going to get worse before it gets better. There are more watches being made now than ever before, and it is not enough. More people and more money is flooding into that space, and demand is outstripping supply and will continue to outstrip the supply. If you are hoping for something to happen, for suddenly the bottom to fall out of that market, I think that your hopes will die, that you are waiting in vain. I believe your only hope is to abandon the hype brands and find the next big thing within that group before it catches on. I think that is your only hope of getting great watches and not having to surrender either exorbitant amounts of money or your dignity or both to get hold of a watch. Okay, so that's it. They're the highlights, the headlines, the big points I can see coming out of the Swiss watch export figures for 2021. Some half-assed economics analysis, some guesstimates about what's going to happen in the future in there as well. I am not a financial advisor, and I completely acknowledge I'm something of a dilettante in that field. If you've got different ideas, different views, love to hear it in the comments below. As I said, I've been Pete McConville. This has been Not So Obvious Watches. I will see you later. Bye.